Welcome to StockMarketFunding.com. We've enjoyed this Google trade. Everyone is being punished on it, and the SMF Pro Traders are making money on it. Now, how do you like that? All right. Google beat by 16 cents a share. All right. Consensus of 660. Revenue ex-TAC rose 24% year over year to 5.06 billion versus the 4.95 billion. There is no miss in the number here, people. And another thing is Google-owned sites generated 4.44 billion, or 66% of the total revenues in the first quarter of 2010. This represents a 20% increase over the first quarter of 2009 revenues. There's nothing wrong with that. Up 3.69 billion. Google's partner sites generated revenues through AdSense programs, 2.04 billion, or 30% of total revenues in the first quarter of 2010. This represents a 24% increase from the first quarter of 2009 network revenues, the network revenues of 1.64 million. Aggregated paid clicks, which include clicks related to ads served on Google sites and the sites of our AdSense. Back to the earnings, we had some traders that got hit on the shares and whatnot, so I had to address that. But here, let's take a look. Once again, Google sites and their AdSense, but here's the thing, and it increased approximately 5% over the fourth quarter of 2009. Now, here's where we're going to get to the operating expenses. Other than cost of revenues were 1.84 billion in the first quarter, or 27% of revenues, compared to 1.52 billion. That's because they've been doing a lot of development and other things. Now, when we take a look, or 28% of the revenues, non-GAAP operating income in the first quarter of 2010 was 2.78 billion, or 41% of the revenues. This compares to a non-GAAP operating income of 2.16 billion, or 39% of revenues in the first quarter of 2009. Here's the thing. Net cash provided by operating activities in the first quarter of 2010 totaled 2.58 billion, compared to 2.5 billion in the first quarter of 2009. We expect to continue to make significant capital expenditures. So basically, I don't want to keep the tape too long. Headline number beats by 16. This report isn't bad in my view. And the thing about it is, on the weaknesses looking forward as far as intraday trading, taking advantage of call options, is that we get the second round of the next profits off of the actual trade. And that's what we're going to be doing. So, once again, Google beats 16 cents better.